All right, you should be seeing my screen now. All right, guys, I need to get started. I know there's still people coming in, but we have there's so much information in this presentation today, and I'm pretty excited about that. Um, there is I'm gonna give you guys like the whole roadmap. I'm gonna break it down. I'm gonna give you like really truly everything you need to focus on and be working on. So are you guys ready to get started? Can I see in the chat? Are you guys ready to get started? Can we do this? Are you guys excited to learn like how to do your first apartment deal without money or experience? That sounds pretty cool to me. And it was not presented to me like that when I first got started in this. So I think that's a pretty good opportunity. So, how to do your first apartment deal without money or experience? That sounds pretty cool to me. And look, guys, if first off, I want to acknowledge this is not easy. If you're in the real estate investing space, it's not easy. There's probably a reason why you've got into something like this. Now, listen, if you failed at real estate in investing in the past, it's not your fault. Don't worry about it. It's hard. There is a lot of information out there, misinformation, and sometimes it's hard to do it if you don't have the right guidance. And maybe you've even thought to yourself, maybe I'm just not cut out for this. Like maybe I should just give up. I don't want you to do that, okay? Stick with it. You only fail if you give up, okay? So just stick with it. Now, for me, I can tell you this is very much a true statement. I feel that, Wall Street and these other banks, they want you trapped to their game. Like they want you investing in the 401k in the stock market. But I'm telling you, there's a better way. And if you've been watching what's happened recently in the stock market, it's tanked drastically. But everything I have in real estate's been really good. Okay. So if you think they don't have your best interest in mind, you're probably right. Like they get their fees and all that stuff. And it doesn't matter how good the stocks perform, they still get their money, which sucks. Okay. So, but that's what we're here to talk about today is how to help you really unlock growing your wealth through apartment investing. Okay. So I want to share with you, first of all, who is this for? Like who should be listening and paying attention here? Okay. So if you're brand new to real estate investing, maybe you've never done a real estate investing deal before, not a wholesale, not a fix and flip, not a single family rental, nothing. This is absolutely for you. Okay. I'm going to share with you a little bit. I started with little to no experience. Okay. So this absolutely can work for you. The other person this is for is maybe you're already in real estate. You've looked around in some other areas and you've either frustrated with what you found or you've figured out that it's not scalable. Okay. It's very challenging to scale a lot of these real estate strategies. Okay. So, my goal for you today is to really show you why multifamily syndication, I'm going to explain syndication here in a little bit, but why multifamily investing is the fastest, safest, most scalable path to your financial freedom. Okay. Now, I've tried a number of things in the past. Okay. I have purchased 3 single family homes. I've done a flip, which was not fun. I would mark that off as a maybe not a disaster, but I learned a lot and I'm not doing that. As a result of that, I decided I didn't want to rent. And I've looked at a lot of other things. Okay. I'm going to help you skip all that. Okay. If you've never done it, I'm going to help you skip it. If you're stuck in that, I'll help you like learn how to move past that. Okay. And I'm going to show you this thing about getting into apartments called apartment syndication. Okay. But before we get started, if you've never met me before, you've never worked with me before, my name is Stephen Lee Thomas. I'm a multifamily investor. I'm an entrepreneur. I'm a podcast host, and I'm a business coach. And what I do is I help people buy apartment complexes. I help change people's lives by showing them how to get into their first multifamily deal or scaling up to do more deals. Okay, now a little bit more about me and my partners. My partners and I have done, let's see, 2, 4, 6, 8, 10, 12, 14, 16 deals. Okay. So we've done several deals, all large apartment complexes, and I'm in my 8th year in this apartment real estate space. Okay. But I want to tell you, it wasn't always like that. Okay. For me, it took me a long time to graduate college. I was not the best student, but when I did, I made a whopping $40,000 a year with my first job out of college. That was kind of hard for me because I went to school like I was told. I got a degree like I was told. At the time, I was bartending, and I was actually making more money as a bartender than I was in a 40-hour a week job. And I was like, this doesn't make any sense, but it's what I've been told to do. So fast forward a little bit, and I'm like, I'm not making any money, so I changed jobs. That's what most of us do. We change jobs. And I'd get my 3% pay raise. I get my, 5% pay raise. Nothing crazy. And a few years go by, and now I've got a mortgage and a couple car payments, and I want to do travel. And I'm like, ugh, frustrated. Okay. What do I do? Well, I wanted to create enough income to have true financial freedom. That was what I needed. I wanted financial freedom. And my job wasn't going to do that for me. I was starting a family, and I wanted to be present and available for them. And really deep down inside, there was this like fear of, how was my wife seeing me? How was my family seeing me? I always had these big dreams and aspirations, but I felt trapped in what I was doing. Okay. And I had looked into single family rentals. I did the math. I'm like, dude, I need like 100 single family rentals. Like that's gonna take me 100 years. Like this is ridiculous. I can't do that. So we flipped a house. That was a nightmare. And then I was like, I'm gonna go into apartments. Okay. So I'm like, cool, this is something that I can actually finally scale. And but then I was like, I can't afford an apartment complex. I'm like, ugh, I'm done. I'm out. Okay. But then I learned about this thing called syndication. Syndication, I'm gonna show you more about that, but syndication is really just a fancy way to say using other people's money. So then I learned that I didn't have to have experience or my own cash to get into a deal. And I was like, what? I can do that and I can keep my job. So what I did is I set out to find deals and build these relationships and really, figure this out. But I was trying to do it alone. And there was this point where I was ready to throw in the towel. I was like, I'm done. I don't want to do this anymore. Okay. But then what I figured out is how to align myself with other people who were doing this and get the right coaching and mentoring. And all of that changed my life. And I'm here to tell you that your first deal is really, really, really hard. But after you get that first deal, everything changes. Okay. So look, my story is not unique. And maybe for you, you're stuck in the 9 to 5, you don't have a good exit strategy. You're like, I want out of this. You've tried rentals or flips or wholesaling, and you're feeling burnt out and you don't see the scalability in it. But ultimately, what do we all want? Want some passive income. And we tried other things, but a lot of times we don't know where to start. Okay. So a little bit about me and my first deal. If you haven't seen this before, my first deal was not a duplex. It was not a fourplex. It was not 10 units. It was not 20, 30, 40, 50, 60, 80, 100. It was 184 units, guys. Okay. I am nothing special. I just worked and worked and worked and worked and worked until I made it happen. I wanted to give up multiple times along the way. Okay. But I'm here to tell you that your first deal you can do, and it can be very large. It doesn't have to be this big, but you can do it. Okay. I was working a full-time job. I was starting a family. Okay. I was busy. I didn't have tons of money. All right. But you can absolutely do this. Okay. So it was almost a $29 million deal, $24 million loan. We raised almost $8 million in capital, but a projected return of over 100% for any of our investors. On day one, my partners and I made $280,000. And over the life of the deal, my partners and I are going to make over $3 million. Okay. No experience, never done it before, failed at real estate investing in some other areas, but I finally figured out how to do this. Okay. So here's the takeaway from that, guys. You don't need millions of dollars to do this. I didn't have it. You don't need a real estate license. I still don't have a real estate license. You don't need to quit your job. And you don't really even need to have experience. Now, is that exciting? Is that cool? Like, if you can get into a deal that big, would you be pretty excited about that? Like, you'd be like, sweet, man, like, show me how to do this, because that's me, right? That's what I'm here to show you guys. All right. That's what I want to teach you today. Okay. So, my goal today is actually very simple, and I want to help answer this one question for you. How do I get into my first multifamily deal? Okay. But I want to back up. Well, let's see. I'm going to show you there's basically five areas you need to focus on, okay? I'm going to unveil these secrets for you. I'm going to show you exactly what you need to be focusing on, okay? But first, why apartments? Okay? Now I already explained some of that before, okay? So I had looked at single families. I was doing a lot of the math, and I told you like I need 100 houses. Like this is lame. I can't do this. There's no way. And then I have to manage 100 houses, and I have to burr all of these. Like I just was like, it's not sustainable at all. Okay, so I'm not doing that. Um, my wife and I bought an old house to flip and then eventually sell. We moved into it while we were flipping it. We were starting a family. We had a little one and another one on the way. There was stuff stacked up in my house, I don't know, for like half a year while we were trying to get contractors to show up to finish the job. And then when we went to sell it, because we're like, we'll flip this thing, the real estate agent said, you over improved your house. I'm like, what? He's like, yeah, your house is really nice, but nobody else's in the neighborhood is this nice. So you're not going to get all the money that you put into it. I'm like, that sucks. Okay. So I was like, strike one, strike two, like this sucks. Okay. But then I found apartments, and the reality here, guys, is when I learned about apartments, I got really excited, and I figured out that you can actually truly scale. Okay. Like it's really truly a way to scale an apartment. And a lot of people don't talk about it. It's very daunting. But here's the real secret I learned. I used to think that apartments were only for the ultra wealthy. Like, how do you get the money to do this? Okay. But I learned about syndication. I knew that from buying my first home, the size of the down payment was big. And I'm like, I can't afford that. There's no way. So I told myself I was going to have to stick to single family fixed and flips. But like I said, I learned about apartment syndications. And there's this little known thing. A lot of people don't talk about it, but basically what this means is you're using other people's money. Okay. You don't have to use any of your own money to do this. That's really all it is. And it allows you to get into deals really quick. So that's pretty cool, right? This is really it. This is the secret to it right here is apartment syndication. And I'm going to show you exactly how you can break that up. Okay. Now, a question I get is if I'm really using other people's money, can I even make any money? And the answer is you can make a shit ton of money. Okay. I'm going to show you exactly how much money you could make on doing a $5 million deal. All right. So here is the breakdown for it's what's called if you're gonna do these under syndication, you're gonna be a deal sponsor. Okay, you're gonna be a general partner. So how much money could you make on a deal? We'll say $5 million deal. It depends on what market you're in. Maybe that's 20 or 30 units. Okay. Um, maybe it's a little bit larger, but here's the reality of it. This assumes that you're going to invest $50,000 of your own money. Okay. I'm going to give you a cheat code for that, how you can still invest money even though it's not your money. Like I'm going to give you a cheat code for that a little bit later. Okay. But here's what would happen. You basically get paid in multiple ways when you structure deals as a syndicator. It's actually better than doing it by yourself. Okay. You get an acquisition fee. You get paid upfront for when you close the deal. You pay yourself back and make money as you do it. Okay. Now, because you invested $50,000, you're getting cash flow from the property. Okay. About $4,000 a year on this. So you're getting $20,000 of your, return because of the 50,000 that you invested. Then because you're a general partner, you automatically day one, you get equity in the deal. In this example, you're getting 20% of equity in the deal just because you put it together. Okay. That's going to make you $225,000. Okay. Then you're going to stack in an asset management fee that you're going to collect because you invested at $50,000. When you sell it, you get a return on your investment. Because you got 20% of the deal up front when you sell it, you get another big chunk. So you could get into a deal where you invest $50,000. Like I said, I'm going to give you a secret how you can invest 50,000 that's not even yours, and it turns out to be yours. At the end of the day, you're going to make $885,000. Okay, that's the amount of money that's coming back to you. That's your initial 50,000 plus $835,000. Okay, now my suggestion is you do this with a partner or two. You're going to want somebody to show you how to do this that's done this once or twice, and so you're going to split this up maybe one or two ways. But if you, that's it right there. That is the recipe right there. That is the secret to becoming a millionaire from multifamily. And you can make a lot more money doing that. Okay. A lot more money than any of the other things that I've seen. Okay. So how do you get from here to there? Right. So let's walk through this. The first thing here is really your mindset. You have limiting beliefs. You need to find some partner, somebody who's done it before, and you need to identify your role. Okay. So what is the first thing that you need to focus on? Now, I like to start with limiting beliefs because I feel that limiting beliefs are the number one killer of success. Okay. So I'm going to share with you some things that I used to tell myself. And the reality of it is they're just stories. None of them are true. Okay. You might be telling yourself, I'm not experienced enough to buy an apartment complex. I'm telling you guys, my first deal is 184 units. I had never owned an apartment complex before. Okay. That is false belief. Don't tell yourself that story. Okay. Number two, my experience of going out and finding these single family deals. And here's what I learned. If you go out and this one right here, if I can make more money by flipping single family homes or wholesaling. Here's why that's wrong. Okay. If you're doing single family flips or wholesaling, you are hunting, hunting. You kill, you eat, and then you starve until you find something else to hunt and kill. That's the reality of it. Whereas if you're buying an apartment complex, think of it like this. You're buying a farm, and when you buy it, you get to harvest, and then you get to grow the farm bigger, and you get to harvest as you own that farm. And then when you sell it, you get to take another big harvest with you. So it is a very different mindset of I'm going to hunt and kill and starve versus I'm going to go buy a farm and it's going to just keep paying me as long as I've got this thing. And it just pays me and pays me and pays me. Okay. So that is huge mindset shift that I had. Okay. Uh, Next mindset limiting belief that I had is I don't have time to do this because I have a 9 to 5 job and I have a family. Absolutely not true. When I started, guys, I was literally my son was 3, my wife was pregnant when we started. I was working for a one of the fastest growing, actually, it was the fastest growing company on the Fortune 500 for like 6, 7 years in a row. We went from like a Fortune 458 to a Fortune 25. That's hundreds of billions of dollars in annual revenue. We grew crazy. I was busy at work, crazy busy at work, but we did it. Okay. And then the last one really here that I want to tell you is I don't know how to find partners to deal with. Okay. So I'm going to segue into what's the best way to start if I don't have experience. Okay. Now, I don't want you to hold yourself back thinking that you've got to do this alone. I'm going to tell you that I don't think you should do it alone. Okay. But the reality of it is, it just takes a decision, okay, to start looking, and I guarantee you those resources are going to be there for you. Now, I want to do a quick little exercise with you, okay? So if you're multitasking, stop. Give me your attention because the next 30 seconds might actually change your life, okay? I'm not joking about this. What I want you to do is I want you to look around your room, wherever you're at, and I want you to look at everything in the room that's red, okay? Look around. Maybe you've got a red pen. Maybe you got red on your book. Maybe there's red on your watch. Okay. You have an inventory of everything in your head that's red. Okay. Think about that for a second. What is red that you can see? Okay. Now, tell me everything that's green. Do you see what just happened there? When you look for something, that's what you'll find. The problem is you're not looking for the right things. And so I'm going to show you all those things you need to be looking for. So if you keep your mind open, guys, if you keep your mind open to looking for the right things, looking for something different than what you've been doing, it's there. The resources are there and available for you. It's just a decision. Okay. For me, I just made a decision that I was getting into apartment investing. What I did is I got onto a plane and I walked into a room full of hundreds of multifamily investors, and it changed my life. It was just a decision. They were always there. I just had to change the way I was looking at it and surround myself with those right people. Okay. So here's what you're going to do. You need to build a team and really understand your role. Now, when it comes to apartment investing, um, this is really your core team right here. You need someone who can find deals, raise capital, be an underwriter, someone with experience. net worth and liquidity and risk, that's your money down, and an asset manager. You don't have to do all these things. You only need to do one thing really good and then find the other partners that can complete this for you. And that's really it, guys. Okay. So you can absolutely do this. You need to learn your skill sets and bring that value to a team. So, guys, can you see if you surround yourself with the right people, can you see how this is going to make this process like so much easier for you? Like, put yourself in a room. If I guarantee you guys, if you walked into a room with 100 other people doing the same thing, that's only 10 other people doing the same thing, just 10 other people who are doing apartment investing, would that change things for you rather than hanging out with the people you're hanging out with now? Would it change things for you? Absolutely, it would. Okay. So now what I've taught you is that a lot of things, limiting beliefs are actually holding you back. Okay. Find some people who've done this before to help you out and identify your role. Okay. That's going to get you moving forward very quickly. Okay. Now, here's the next thing you need to do. Pillar 2, locating deals. All right. How do I find the best markets? I get this question a lot. Like, how do I find the right markets? Am I in a good market? I have to be in a good market, but how do I find the right markets? Okay. So for me, here's what I have discovered. Okay. If you do this, you make the chances for success go up a lot higher. You're looking for landlord and business friendly states. Okay. You're looking for places where there's above average population growth. You're looking for places where there's an above average affordability gap. You're looking for places where there's above average job growth. You're looking for places where there's a very diversified economy. Okay. So these are going to be major metropolitan areas. And I'm going to share with you some places that you should be looking. Okay. I'm going to give you some really good examples. Okay. But if you do these things, if you look in these areas right here, that's going to be higher returns and it's going to lower your risk. Okay. So here are my top 10 markets. Dallas, Fort Worth, great market. Tampa has been on fire. Houston, another good one. Southeast Florida, there's a lot going on down there in Southeast Florida. Salt Lake City, kind of tough to get into, but it's another thriving area. Just tons of growth there. Charlotte, North Carolina, Las Vegas, Raleigh, Indianapolis, and Nashville. Okay, those are my top 10 markets. Now, you're thinking to yourself, like, what do I do if I'm not in one of these markets? This is great, Stephen, but does it actually, how do I handle that? Okay. So let me tell you, I don't live in any of these markets. I live in California. I've never invested in California. Well, we had our flip we did, but apartments, I've never done it. It's always been like in Texas or some other places. Okay. So it's really those relationships, like I was telling you about. I already talked about that. Okay. But otherwise, there's a lot of really good markets out there, guys. So look back at that criteria we just talked about, do a little bit of research, and maybe you find something that's closer to you. Okay. Don't worry about having to be in these top markets. If you can stack the deck like what we're just showing, there's a lot of fantastic markets. Okay. Now, the next question we get is what types of properties should I be investing in? So now, for me, I had figured out how to get into some of the best markets, but then I still had the same problem of now I'm in the right markets. What types of properties should I even be buying? Should I be buying brand new? Should I be buying distressed, really old? And so I still had the problem of like, what type of property should I get? So I was like, well, shit, man, like maybe I'll just underwrite everything. I'll just underwrite every single deal and see what works out the best. Okay. What I found is that after underwriting hundreds of deals, there's actually a nice sweet spot. And what I'm going to do is I'm going to share with you the sweet spot of where you want to be looking, especially for your first deals. Okay. So here it is. You should be looking for stabilized properties where you can add some value. I'm not saying super distressed. I'm saying add some value. Do some unit turns, add some private yards, add some covered parking, add some washers and dryers. Okay. Something that's relatively stable where you can add value. I would say for starting properties in the 20 to 60 unit range. What that does is it gets you out of some people who are buying, with some of their own money, the 10, 15 unit deals, the 8 unit deals, and then you're below some of the larger syndication groups or REITs that are out there competing. They're more aggressive. It's a nice sweet spot right there. Okay. B and C class properties. They don't make more B and C class properties. They're building A class properties, but they never make more B and C class properties. That is where your working class is. That's where they live. Okay. I would suggest sticking to primary and secondary markets. Tertiary markets are very hard because there's really only generally one major employer or one type of industry. And if that goes away, then you're screwed. Okay. And I also recommend a median household income of 55,000 or higher. Okay. If you can do that, what happens is people have a little bit more disposable income for the value add projects that you're doing. Okay. So now, how do I find apartment deals, right? I've shown you the markets. I've shown you the types of apartments. How do I find apartment deals, right? Now, for me, I used to think the off-market deals were the only deals I wanted to see. I would go to the brokers and I'm like, hey, show me your off-market deals. Like, that's what I want to see. You know what happened? Brokers quit responding to me. I'm like, oh, okay. And there weren't a lot of deals. So I told myself I'm just going to have to make it work with whatever leftovers there are. Here's what I learned. Okay. Most deals actually aren't off market. Some are, but most of them actually aren't. And it's really more about the relationships that you build with those brokers because probably 80+% of deals go to a broker. Maybe 90+% of deals go to a broker. And if you can take the time to build a relationship with a broker and you can show them that you're serious, they will send you deals that are actually off market. They'll send it only to a few people that are actually doing so. Okay. So where can you find deals? Your team, as you get a little bit further along, definitely your team, property management company, your partners, your mortgage broker, like there's people on your team that can help you out. LoopNet and Crexi, I've done a whole training on that one before. My favorite, listing brokers. If you can find owners, that's a good opportunity, but you have to remember they're going to want top dollar. They might even go to a broker. MLS, Zillow is the easiest way to find that if you don't have access to the MLS. Those are all going to be smaller deals. Okay. There's other paid subscriptions out there. I've never done it. I don't need it. I do recommend investor groups, and then there's your National Apartment Investing Association local, and that might be a way for you to get connected with some of these local owners. Okay. But the reality of it is, guys, it's not what you know, it's who you know. Build those relationships. Okay. So now, what I've shown you is how to find the best markets. I've shown you my top 10 markets. I've shown you the exact types of properties you should be investing in and the best way to get deals. Okay. So is this helping you guys out? Can you guys share in the chat? Is this helping you guys out? Are you starting to see how this actually might be easier than you thought with the right guidance and the right outline? Like, is this helping you guys out? Okay. Awesome. Good. I love it. Appreciate the feedback. Okay, let's go on to pillar number 3. Pillar number 3 is one of my favorites. Now, I have a background in IT, a lot of data analysis, so it's an area that I naturally gravitated towards. Okay, but how do I find deals that pencil out? Man, I get that question a lot. How do I find deals that pencil out? Okay, so I can tell you, I have spent hours underwriting deals, hundreds of hours underwriting deals. My team and I have underwritten hundreds of deals. I used to get up at 5 o'clock in the morning every day and underwrite deals. On my lunch at work, I would underwrite deals. I would put the kids to bed and I would underwrite deals. Okay. Now, I told you I used to think off market deals were the only deals that I wanted to see. Okay. But there's a lot I learned on how to fast track this, guys. And I'm going to share with you just a really quick 4-step process to analyze deals. Okay. And I'm going to break this down for you even more after that. But here's what you want to do. Okay. Here is a quick property analysis you can do. Okay. Now, there's 4 steps to this. You can get a lot more complicated, but here's like a really quick way to assess a deal. Step number 1, okay, is you need to figure out your operating income. That's the number of units times 12 times the market rent. Okay, so you got 12 months times the market rent, 93 times 93%. That's going to be your occupancy goal. Okay, then you're going to figure out your operating expenses. Okay, and that's generally between 50 and 60% of the income. Ideally, you want it to be less than 50%. So I generally use 50%. Okay. Then we'll do the net operating income. So the operating income minus your operating expenses. So it should be about half. And then you figure out the property value. That's your net operating income divided by the cap rate. Right now, most markets, I would say you could probably use a 6% cap rate. Now, this is just quick analysis, guys, but it's actually very effective. So let's walk through this, okay? Here is a real deal. It's a 46 unit deal. We have our in-place rent. We have our pro forma rent, okay? Here's the number that we're going to use down here, okay? So we're going to do a quick analysis of this deal, okay? So what we saw, the pro forma operating rent on the 46 units on average was $1,118 per month. You got 12 months at a 93% occupancy. Okay. That gives us, here's our operating income. Okay. And then we need to figure out our expenses. It's gonna be about half of this. So, just shy of 300,000. So our net operating income is 286,000. So if we wanted to see what's the value of the property, so they're going to be listing it for, I don't know, $2.5–3 million. And you're like, well, if I get this property, is it going to make me any money? Okay. So if you take that new property value divided by the cap rate of 6%, you'll see that, now it's about $5 million. Okay. So that is within just a couple of minutes, you can quickly now look at a deal and figure out, like, is this deal going to pencil or not? Okay. That is my cheat code gift to you. Don't worry about doing crazy underwriting. Okay. You can spend hours and days underwriting a deal, but don't waste your time doing every deal. I did it for years. Don't do it. Okay. This is my cheat code. It's going to help you guys out a whole bunch. All right. So now, what information do I need to underwrite a deal? Because there can be a lot of information out there, but you might not know exactly what it is. So what I'm going to do is I'm going to share with you that before you submit an offer on a deal, here's everything you need to have. All right. Here's everything you need to have. And if you can get all these things checked off, then you can start submitting offers on deals. Okay. So the top three things, these you can get from a broker right away. You need these things at a minimum to underwrite a deal. So it's offering memorandum. That's basically their marketing brochure. The T12, that's their 12-month profit and loss, and you need a rent roll. If you have those things, you can underwrite a deal pretty quickly. Okay. And that's basically what we just did with the quick property analysis. Then you get a little bit deeper. You need a unit mix. You need to build a rehab estimate. You need your actual net operating income. You need your pro forma. That's your forward-looking net operating income. You need to get debt quotes. Okay. You will need to work with some lenders on this, and I'm going to talk about that in a little bit. Insurance quote. You need a property analyzer. Okay. The four-step process I showed you is good, but you need something that's going to get you a little bit further along. Okay. You got to do a market survey. What is a market survey? That means you're actually going to go out and you're going to visit some of the competing properties. You're going to see, can you implement your business plan here and make money? Okay. My advice is don't be the best apartment complex in the neighborhood. Don't be at the top. Okay. You want to be just below that. Okay. And then you're a deal. Otherwise, you're expensive. Okay. And then you need some market data. CoStar is great. There's others that are out there. But once you have all of this information, you're in a position to fully underwrite a deal and to start submitting offers. Okay. So underwriting can be overwhelming, but if you break it down into simple steps, it's actually not that bad. It's pretty simple, and I actually enjoy it. Okay. I can underwrite a deal, full 5-year analysis. I can do it in under an hour, 30 to 45 minutes. I got a pretty good idea if the deal is going to work. Okay. And that's a full 5-year underwriting analysis. And you guys can get there too. It just takes some time and some patience. All right. So now you guys know how to quickly underwrite a deal, and you know everything you need in order to create a business plan before you buy your first apartment complex. Is this helping you out, guys? Is this the type of stuff that you want to see? Is this like, man, like, why didn't somebody tell me about this sooner? Okay. That's what I'm trying to do. I'm trying to help just lay this whole roadmap out for you. All right. Let's get into number 4 really quick. Now is funding. Okay. That was one of the promises that I talked about in this. Okay. How to get into your first apartment deal without money. Okay. This is how you crack the code. Okay. And so this is why I say apartment syndication. There's a lot of people who can bring money to the table. All right. So how many of you struggle with this idea right now? How do I fund a deal without my own money? I don't have the money to do this, Stephen. That's my problem. Okay. I struggled with that for a very, very, very long time. So how many of you think you have to start small? I'll get a duplex, a fourplex, a 8 unit, and I will just, slowly over time. Okay. Probably the reason why you're thinking that way is because of this limiting belief is that it's not easy for you to get money. Okay. How many of you have told yourselves, I can't afford to buy an apartment building? Okay. Probably everybody on this call at one point has told themselves, I don't have the money to do this. Okay. I used to think exactly the same thing. And I looked up tons of fourplexes. That was my plan. My wife and I, first place we moved in was a fourplex. And I was like, cool, I can do this, and I never pulled the trigger on it. Okay. I never did. And actually, I'm glad it worked out that way. Okay. So I truly believe that for me, the biggest limiting factor was the money because I got to come up with all this money. I know how much it is to buy a house. How do I come up with all this damn money? Not only do I have to buy it, I have to have money to rehab it. Okay. But then I learned how to use other people's money to buy deals. Okay. And that in that moment, like the whole world changed for me. Okay. That's pretty cool, right? Like I was like, wait, you mean to tell me I can go buy a big apartment complex and I don't have to use any of my own money? Like, that's cool. And so I hope you guys are excited, but I'm going to show you how to do the same thing. All right. So let's break this down. Okay. There's a few different options that you have here, and you're going to use a combination of these things. You don't have to use all of it, but you're going to use a combination. Okay. So I'm going to walk you through here. And I'm going to show you a graph here on the next slide. But what you need to understand is there's going to be a primary lender on this, and they're going to be the biggest lender on the entire deal. Okay. Now that could be seller financing. Maybe you find a deal where it's seller financing. Okay. They become the bank. Okay. You can leverage that. Fantastic. So that's option number one, seller financing. Not every deal is going to be like that. Then you have traditional lenders that Fannie Mae, Freddie Mac. You've got your credit unions. Okay, that's going to be your traditional lenders. And then you have private lenders. Okay, all of them have different requirements. Seller financing, that they're maybe they'll do a credit check, maybe they won't. Traditional lenders, they're going to be much more strict with what they're going to lend. And then private lenders are really less concerned with some of those requirements. And so you have multiple options here. And this is going to be the most money that comes to the table. Okay. Then you have to close the gap. Like, how do you close the rest of the gap? Okay, Stephen, this is great. I got a bunch of money, but I still have a gap to close. Okay. So you can actually bring in private equity. We call it a capital stack. So you have your main lender, then you can bring in private equity, or you can raise capital, or you can do a combination of both. Okay. So if you can have a conversation with some people and invite them to invest with you, and you raise 20, 30, 40, $50,000 from 5 to 10 people, that's a lot of money. You can bring in a little bit more private equity here, and you can close that gap pretty easy. Then you also have, when you're first getting started, you got to put a deposit down on the property. And if you don't have the money, you can actually use a hard money lender. Okay. And this works. I know people who do this. So let me show you what that would look like if you were to move forward on a deal and you really didn't have the money to do it. Like, can you actually do this with none of your own money? Here's how you can do this. Okay. So here's this main group I told you about. They're going to bring roughly, I don't know, 60 to 80% of the money to the deal. That is, most of the money is coming right here. Okay. Then you have to cover this other gap, right? This is like, the money that you've got to put into the deal. Private equity or raising capital. You can leverage both of those, or just use capital, and you can stack this stuff up together. Okay. So now no money. I'm using other people's money. Okay. And if I need that little bit of money to put down on a deal, I can always use a hard money lender. Okay. I can do that. And what I can do with that when I close on the whole thing is I get an acquisition fee. So remember the acquisition fee I said at the beginning? I can borrow money from a hard money lender because I don't have it to put down. And what I can do is through my acquisition fee, I can pay back the hard money lender when I close, and I could take the money that I get from my acquisition fee and I can put it back into the deal. So what I'm telling you guys is not only can you do this without your own money, but you can actually get in like 20 to 30% equity and do more investing as like a passive investor. So you have a passive investment and you have a general partnership investment, and you've never used your own money. It's pretty amazing when you're like, wait a second, I just got an apartment complex and I made money, and I like, as money just like appears. It's this really, really cool thing that happens. But that's how you can do it, guys. This is how you can structure a deal where you actually don't use any of your money, and you don't even have to have the money at day one if you wanted to. Okay. Right. So here's what I just showed you guys. Okay. So now you know money really isn't the thing keeping you from getting into a large apartment deal. Okay. Lack of money is not your issue. It's your mindset. Okay. I said that earlier. It's your mindset. Okay. So do you see why that's important? Is the mindset so important here? Because there are ways to do this. Okay. You guys are seeing why this is so exciting. Like I hope for all of you guys, the pieces are really starting to come together. Okay. Then the last piece of the puzzle here, and this is where I see a lot of programs like fall down. Okay. Is a lot of these other programs will teach you how to analyze deals, but they really don't teach you a whole lot about funding. Maybe they talk to you about lenders, but they don't give you any structure on how to raise capital or work with these private money lenders or hard money lenders. They don't really talk about that a whole lot. And then once you get a deal, what do you do with it? Okay. So the last pillar here is the asset management. Okay. So asset management, here's the next question you guys are probably asking, like, what do I need to know about running and operating apartments? Okay. So when I was looking into single family homes, my plan was to manage, be the property manager for all the houses I bought. Okay. Now, I never went forward with it because I just got overwhelmed with the whole thing. So when I started my journey in real estate and I was looking into single family homes, as I said, I wanted to like, oh, I'll just manage all these properties. But I was like, shit, man, I'm just buying myself a job. So I got very overwhelmed. I had this notion that I needed 100 units. Like, how am I going to manage 100 houses? Like, how can I do that? I'm going to have to hire other people. That there goes my money because there's not a lot of money being made on these single family homes. Like, okay. So even if I could buy a deal, it's going to be the same thing with apartment complex. I don't know how to manage an apartment complex. And I don't want to buy myself another job. Okay. What I learned at this point, at this stage in the game, is that the best thing you can do is actually hire a property manager. Okay. Because that's what they do all day long, guys. That's their job. They know the market better than I do. Okay. They staff for this. And I was like, all right. That makes sense. Okay. Like, a good property management company is probably one of the most important business partners you can have. No joke. Okay. A good property management company will make your apartment successful. A bad property management company will drive your apartment into the ground. Okay. Here's what's beautiful about it. Okay. Especially on your first deal. There's a lot of really good things here. Okay. So you don't need to be on site or hands on. Okay. Like I live in California. I visit my properties not very often. I don't do it. Okay. I speak to the property management companies a lot. I have partners that live in the areas and they will visit the properties, but it's not like they're there every day. Okay. The other thing that does is it allows you to move on to the next deal, right? So you avoid burnout and focus on growing your portfolio. Okay. This is where you get your financial freedom. Okay. If you try to do it all yourself, you're going to get burnout. Okay. And you get to tap into the property management company's systems, their team, their expertise. This is what they do all day long. Okay. Let them do what they do. Let them do what they do and get out of the way. Give them guidance, fire them if they're not doing good, but leverage them heavily. And then the last thing, you guys probably haven't thought about this, but it actually makes you more lendable and credible to lenders and investors. Okay. So when you start working with a lender, whether that's a private lender or a standard lender, an agency lender, they want you to have a property management agreement in place. That's a contract with a property management company. They don't want you to do it alone. Okay. They want you to have a property management company. Okay. So this gives you your time back. You can get the deal, you can get your time back. Okay. So now, what are the key metrics that you should be focusing on? Okay. The property management company is great, but I'm going to give you some key things that you really want to focus on once you acquire the deal. Okay. Now, for me, the first deal I got into, I raised my hand and said, I'll do asset management. Okay. I didn't know what I was doing. And actually, the property manager called me out and was like, hey, like, you need some help here. And I'll be honest, like I had I had a corporate background. I'd done project management, but it was an area that was still unfamiliar to me. Okay. So I got help from the property manager. They told me some things I should really be focusing on, and I leveraged my partners. And what I learned, guys, here's like the bottom line here. This is a business. You are buying and selling businesses. The asset class just happens to be apartment complexes. So treat your apartment like a business and it'll start paying you like one. Okay. So treat your apartment like a business and it'll pay you like one. If you treat your apartment like a hobby, it's going to pay you like a hobby. There's a difference. Be serious about this. Okay. Especially when you're raising capital, you got other people's money on the line. You want to be serious about this. All right. So let's go through some of these metrics here that you need to be keeping track of. Okay. I'm going to run through these. So you have your gross potential rent. Okay. That's your possible rent if it was 100% occupied. Very seldom is 100% occupied, but you want to focus on that. Okay. Your effective gross income. That's your gross potential rent minus your vacancy and concessions. So maybe you have move-in specials. Maybe you have first month free, something like that. Those are your concessions. Okay. What's your occupancy rate? That's your number of units rented versus total available. So maybe you're like, earlier I said 93%. If you can run a property at about 93, 95, 96%, you're doing really, really, really good. Drop into the low 90s, you need to ramp it up. Your goal should be at least 95%. That's what you're pushing the property management company for, 95%. Okay. And then you have your economic occupancy. This is your actual income collected versus your potential income. So maybe you've raised rents, but you've got some people who are still in units and they're not paying that higher rent. And you have to wait the 2, 3, 4, 5, 6 months to get that higher rent. Okay. So that's your economic occupancy there. Okay. Now, the next thing you want to focus on is your expense metrics. Okay. So you have your operating expenses. Okay. That's your repairs, your payroll, utility. There's a whole bunch of other things in there. And if you look at a profit and loss, it's like the expenses are huge. Okay. Then you have your maintenance turnover cost. So this is how much does it cost to turn over a unit when a tenant moves out? Okay. You want to keep that as low as possible. And you can either do that in-house, you can have someone come in and do it, but you want to keep track of that. Then you have your operating expense ratio. We talked about this earlier. So this is your operating expenses minus your effective gross income. And ideally, I'm telling you, you want to have it lower than 50%. If you can, the longer you own the property, you can do this much easier, but you want to try to get under 50%. Okay. And then a few other additional metrics here, your net operating income, cash on cash return. Okay. Now this is your annual cash flow divided by total cash invested. Okay. So that's a little bit more detailed and sophisticated for some of your investors. Your delinquency rate. Okay. This one, pay attention to this because if you are looking at an apartment, you might get a rent roll and it's like, oh my gosh, it's, 98% occupied, but ask for a delinquency report. Maybe you have 10 units of people who aren't paying. Well, you need to evict them. You need to get them out. You need not just bodies in, you need people paying. Okay. So pay close attention to your delinquency rate. Like we track this every single week. Where is this one at? And then your turnover time. How long does it take to turn over a unit and get it back and leased? Because if a unit sits for a very long time, you're losing money, guys. You're losing money. Every day a unit is not available to be leased, you're losing money. Okay. So now you know the best thing you can do is hire a professional property management company. This is a business. Treat it like one, and it'll pay you like one. All right. So, guys, how many of you are feeling excited? Oh, the graphic's not coming up. It's supposed to be a photo of a person drinking from a fire hose. Okay, so just imagine someone drinking from a fire hose right now. I'm not sure why it didn't show up, but so how many of you are excited about what we talked about? Okay, how many of you might be feeling a little bit overwhelmed? You're like, dude, that was a lot of information. Like that was a lot. Okay, I get that. There's way more information, to learn about apartment investing than I can share with you guys in hours, in 50 minutes. Okay, and okay, so you guys, look, I know like buying your first apartment deal, I've done this. It can be hard, it can be lonely. But what if I could help you buy your first apartment deal without experience and using other people's money? Then show you how to go full time. What would that do for you? And the answer is it would probably change everything. Okay. Think about everything we talked about. Think about the amount of money that you can make on a deal. Think about the steps that it takes to get there. Think about the financial freedom that you're looking for. What would that do if you get into an apartment complex? Like, what would that do for you? Okay, it would change everything. It changed my life. It totally changed my life. That first deal sucked. I told you I wanted to quit. I actually sent a message to one of my mentors at the time and said, I'm done. And it was a very, very hard thing for me to do. And I thought about it. And about 24 hours later, I'm like, I'm not giving up. Okay. I got into that first deal and it changed my life forever. Okay. So, guys, I want to invite you to my new school community. It's called the Multifamily Fast Track. Okay. The Multifamily Fast Track is the apartment investing framework, all these frameworks I shared with you, that's going to teach you how to buy your first deal or scale up. And you're going to leverage my proven strategies to buy apartment deals. Okay. So, who is this a good fit for? If you're new to real estate investing, multifamily investing, it's actually a really good fit for you. Okay. You can totally do this. If you have some experience, but you're feeling a little burnt out, you want to grow and scale, it's a really good fit for you. If you've ever, if you've ever tried, or if you're tired of trying to wholesale or do single family fix and flips, you're like, this sucks. Okay. This is a fantastic opportunity for you. Okay. So you right now, you have two options. Two options. You can keep piecing this together and maybe it'll work out on your own. You can go to these other free communities. You can watch YouTube. You can try to do this. You can pick up a book, right? I have lots of books. There's one right here. You can try to do it on your own. Okay. Or you can make it a priority right now to buying an apartment and you can leverage me and use my frameworks and help you achieve your goals. Okay. You have two options right now. Let me answer some of the questions that I get a lot of times. I'm looking in the chat too to see if we got other questions. All right. What if I'm not the entrepreneur type? Can I still succeed in multifamily? Yeah, absolutely. Let me tell you a secret. Most people aren't the entrepreneur type that get into multifamily. They just have a strong desire. It's like anything. It's like riding a bicycle, okay? You didn't know how to do it at one time. You just had to learn to do it. Once you learn it, it's in you forever after that. Once you learn the skills, it's in you forever, okay? So how do I know this isn't going to be just another thing I start and don't finish? It's about your mindset, okay? It's truly about your mindset, and that's why I want to not just give you the trainings, but to actually show up, and I want to be there to help you, okay? So I'm there to help you. There's other people in the community to help you, okay? What if I'm too late in the game? Is all the opportunity gone already? So two things there. No, you know what? One of the ladies that I coach in my inner circle program, she's going into her 60s. She's closing on her first deal in a couple weeks. Super excited about that one. Okay. So number one, it's not too late. Don't worry about that. Like, don't let that be your excuse. Or all the opportunities gone. Now is an amazing time to buy apartment deals. Okay. So the economics for single family homes is very different than it is for multifamily. And I don't have the time to go into it right now, but what I can tell you is that if you can buy apartment deals now, apartment deals are like 25, 30, 40% off from what they were at the peak about 3 years ago. Okay. Let's see. I got a question here. A couple questions here. Are these coming into the Q&A? All right. So we have to pay yearly, or is this a lifetime membership? Okay. So the way school works, the way we set this up is it's a yearly fee or a monthly fee. Totally up to you. Totally up to you. You can stay in it as long as you want, or you're like, look, this isn't for me, then you can get out. Okay. So it's totally up to you how you do this. But it's either monthly or an annual fee. Okay. So lifetime access. Do we have to pay yearly? Okay. Yep. No, so I hope I answered that question. Great question. Thank you for asking that. Yep. But it's a fantastic deal, guys. Fantastic deal. Do I need a bunch of cash or a six-figure income to get started? I think I already answered that question. No, you don't. You actually don't need to have a whole bunch of money. That's what's beautiful about it. I'm busy with a full-time job and a family. How can I find the time to do this? So one of the things I do in the program early on, one of the core foundations is I actually give you training on time management. How can you take the same hours that you have in a day and be more effective with it? And the feedback I get unanimously is that training was great. I'm totally implementing this. Okay. So I give you strategies of how to manage your time way more effectively and better. Okay. Ooh, I love this one. What if I'm more introverted? Can I still raise capital or find deals? Yeah, absolutely. Um, I'm an introverted person. It maybe doesn't seem like that, but I'm an introverted person. A lot of times before a networking event, before a phone call, I get very nervous. But here's what I learned is my why is really important to me. Okay. So what is my why? It's creating a beautiful life for me and my family. Not only that, I get the opportunity to change people's lives that come into this and passively invest in a deal. And when I look at it that way, when I look at the opportunity I can present, myself, change my life, change other people's lives, that fear just like kind of melts away. Okay. So I don't want you to worry about that. Like you can totally work through it. What makes MMH different from, okay, I think it's supposed to be MFT, different from the free YouTube videos or other courses? This stuff is very structured. I do not have all of my trainings out there on YouTube. What I have out there really on YouTube is really just going to be teasers. Okay. It's not, there's some information there, but what I teach you really is more these very specific how, the tactical piece to make this work. Okay. How do I stop overthinking and actually take my first step? Get in the program. Like that's easy. Get in the program, get alongside other people, and then we're going to help you move forward. That's what the program is for. Um, let's see. Can I have my another question here? Can me and my partner have dual access? Um, so Jerry, that's up to you how you want to manage your school account. I will just leave it at that. Okay. That's however you want to manage your school account. That's the best way if you want to have dual access, how you want to manage your school account, because all the training and education is through school. So if you have access to school, that's where you're going to get the training. Okay. And then will the recording of this be sent to us later? I missed the first half. Yes, the recording is going out. We were so excited. We actually sent an email out earlier that with for the recording, we didn't have a link in it. So actually, yes, once this is over, we'll get it uploaded and we'll send you guys the recording. Okay. So you get to watch the first half of this. Okay. Can I really do this if I failed at other businesses or investments before? Yeah, I mean, you know what? That's just part of the process. So I'm a parent, and one of the things I've really learned from being a parent is I tell my children all the time, like, failure is nothing permanent. It's an opportunity to learn. Okay. And think back to when were a kid, if you don't have kids, or if you have children, think about the lessons you teach them. Failure is really only failure if you don't learn from it. Okay. So if you struggled before at something else, that does not mean you're going to fail at this. What it means is you're probably going to be a little bit better because you have some of those scars. I mean, I have scars all over from falling off a bicycle, but I still get back on my bicycle. I still enjoy going for bicycle rides. So think of it like that. Okay. Now, last question I've got here, unless you've got some more. What if I'm passionate about real estate, but I'm scared of talking to investors? Well, a couple of things. Number one is I'm going to give you the tools and resources you need. It makes it a lot easier. So when you have a nice framework to follow, like when you know what to say, it's a lot easier than when you're like, can I get some money? Right? It's very different. Like when you go to someone and say, hey, I need $50,000, or hey, I have an investment opportunity I think might be something you're interested in. Let me learn a little bit more about where you're at, if you don't mind sharing with me. Everybody ultimately what they're looking for is some type of, time freedom and financial freedom. And you don't know where people are at in their journey with, saving for their retirement. Most people are very behind. And when you have the ability to give them a new, better option, it's a game changer for them and you feel great about it. Okay. The other thing is if you're really scared, you got other people that you can work with to raise capital. Okay. So that is the beauty of having a team. Okay, guys. So I really, really appreciate you giving me all of this time. It's a lot of information. I really hope to see you inside the multifamily fast track. I love helping people be successful. Okay. You are one click away. You're one decision away from changing your life. And that's the reality of it. And there are times it's going to be hard, but I guarantee you, if you make the decision and you stick with it, it's going to change your life. All right. So thank you so much for your time, everyone. I really appreciate it. You've been great. And I look forward to seeing you guys very soon in the multifamily fast track school community. Thank you so much.